documents. But I really want to just take a minute and talk about pre-approval for a minute, because it is very confusing. There's all kinds of ideas of what pre-approval means. Number one, we do encourage you. It's almost mandatory or required that if you are looking to buy a home, you do need a pre-approval letter, which means you need to talk to your lender and determine whether or not you are eligible for a mortgage. But this is the point. A lot of first-time homebuyers especially, and understandably so, one would think if they have a pre-approval letter, then that means they are approved. Okay, and really that's just the beginning of the process. What a pre-approval letter means is this, that you've spoken to a loan originator and you have provided them income, employment, asset, and credit information. They normally have pulled your credit, they looked at your income, they've determined whether you're self-employed or who you work for, and they talked about monies available for buying a home. You may or may not provide them documentation. There are pre-approval letters issued every day without proof of your income and assets. They're going by what you say. But based on the information you've provided, whether it's verbal or documented at that time, the lender will issue a pre-approval letter. That's what that means. The key thing is this does not take the place of an in-depth review of pay stubs, tax returns, bank statements, and those kinds of things. That's done through processing and also underwriting. So you're not going that far into it. You're kind of like checking to see, do I look like I qualify? And so we want to make sure that you're clear, because if you get a pre-approval letter, that's a very good thing and congratulations, but you're still at the tip of the iceberg of the process. So I just want you to be clear about that. The other thing is there are 3 kinds of approvals we want you to be aware of today in the marketplace. Because again, the market's changing. You guys, the market's changing, so we got to change. We got to tell you what's really happening. So the market's changing. Pre-approval was a big thing. It used to be the only thing that was necessary, okay? But there are 3 approvals. One is pre-approval. Now you're just getting started. It looks like Janice said, right now when you call today, okay, that you look good. Now listen, I've had borrowers go on maternity leave within 2 months. Right. I mean, who knew, you know? And so therefore things have changed. But nonetheless, pre-approval is at this time you look good. The next approval is underwriter approval. Underwriter approval is now an underwriter has actually looked at your pay stubs, bank statements, and so forth and so on. And they may issue an approval. It's always with conditions, y'all. Don't get your feelings hurt. It's always with conditions. So they are saying, I've looked at your pay stubs, bank statements, and the information I have thus far, and you are approved subject to additional information. And you may stay in that process for a long time through the mortgage process, because as you provide additional information and we ask for documents, but you guys, when we ask for pay stubs and bank statements and you provide it and you say, okay, I gave you that, that's just the beginning. Everything you give us is going to be thoroughly reviewed and looked at, and not by your loan officer. Your loan officer is going to take a quick look, but there are processors and underwriters and other people and quality control people that take a much more thorough look. But the fact that the underwriter has looked at it, that is a very good thing. If the underwriter approves your loan subject to conditions, that's a very good thing. Then the main approval you want is what's called a clear to close. You've heard Janice talk about it before. And even realtors, you got to be asking about this. It's about the clear to close. You know, you can, until it's cleared. First of all, clear to close means the underwriter has said, this file has every single document I think the investor is going to want. And many times those documents have nothing to do with the borrower. I mean, that may be title and insurance and, you know, judgment searches and things of that nature. But the point is the underwriter is responsible for making sure the file has every single thing in it before it's cleared to close. So clear to close is a term we want to become very familiar with, and it is. When it's cleared, you are at the finish line.
Exactly. I like that, at the finish line.
We're at the finish line.
Now stay tuned.